Hello and welcome to AI Market News by LMN. Okay, so the economy is sending some seriously mixed signals right now, isn't it? It feels like for every piece of data that points to strength, we get another one that suggests weakness. It's confusing. So in this explainer, we're going to try and cut through all that noise. We'll figure out what these conflicting reports really mean for the market and take a good look at what might be just around the corner.
All right, here's the game plan. First up, we'll dig into the latest inflation picture. Then we're going to zoom out for a quick check on the economy's overall health. After that, we'll gauge how the markets are actually feeling about all this. And finally, we'll flag what we all need to be watching next. Let's dive in.
All right, let's kick things off with the big one, the release everyone had their eyes on, the Consumer Price Index for December. You know, this is our best gauge for how prices are changing for all of us. And believe me, it really sets the tone for where the market thinks we're headed.
And the headline number is 2.7%. So that's the year-over-year inflation rate for the 12 months ending in December. Now, on the surface, it shows prices are still climbing. But honestly, the real story is buried in the details of how we got there.
So let's dig into that monthly change. The CPI actually ticked up 0.3% just in December. And the main driver behind that? Well, surprise, surprise, it was the cost of shelter. This has just been such a persistent, stubborn factor that keeps pushing that overall inflation number higher.
Let's break this down even more because the details matter. Shelter costs up 0.4% for the month, but check out food. It jumped a pretty hefty 0.7% in December alone. Even energy saw a little bump. And really, this is the key takeaway for all of us. The annual number tells one story, but it's these monthly jumps in essentials that people really feel in their budget. So, that's the inflation story. But how does it fit into the bigger picture? Well, that's where things get interesting. Beyond inflation, other recent data points are painting a much more complicated and honestly, a pretty conflicting picture of the economy's health. Let's look at the housing market, for instance. I mean, this is a perfect example of those mixed signals we're talking about. On one side, we have existing home sales, which saw this really strong jump of 5.1% in December. Great! But then on the other side, new home sales actually nudged down a tiny bit. It just goes to show there are completely different forces at play, and it's creating a super confusing landscape for pretty much everyone involved.
But hey, it's not all confusing. We did get one pretty clear positive signal, and it came from the manufacturing sector. The January survey clocked in with a reading of 12.6. And just as a quick reminder, anything above 0 suggests expansion. So this is a really solid sign that factories were getting busier right as we kicked off the new year.
Okay, so we've got this sticky inflation and a bunch of conflicting economic data. The big question is, how on earth are the financial markets supposed to process all of this? Let's dive into that. Let's check the market's pulse and see what it's expecting for the future.
Well, if we take a snapshot from January 16th, the reaction was, well, kind of muted, a little cautious, you could say. US equity futures were down just a touch. Over in the currency world, the euro dipped a bit against the dollar, while the dollar itself actually lost a little ground to the yen. All this really points to a slight risk-off mood. Nobody was panicking, but nobody was taking any big, bold bets either.
Now, to get a better handle on that mood, we can turn to something like the Fear and Greed Index. Think of it like a mood ring for the market. It looks at more than just prices. It tries to measure the actual emotion, the psychology that's driving decisions. It analyzes things like market momentum and trading volume to tell us, hey, are investors feeling fearful and selling, or are they feeling greedy and buying? It's a fantastic real-time pulse check. And of course, let's be real. So much of the market's mood always comes down to one massive question. What is the Federal Reserve going to do next? The CME FedWatch tool is basically our window into what the market thinks the answer is. It crunches the numbers from the futures markets to spit out the probability, the odds, of the Fed raising, lowering, or just holding interest rates steady. It's an absolutely crucial tool for seeing where the smart money thinks policy is going. Okay, with everything being so up in the air, our focus has to shift to what's coming up next. There are several key events on the horizon that could easily tip the scales and really set a new direction for the markets. So, what should we be watching? All right, pulling up the economic calendar from investing.com, a few things definitely jump out. We've got a speech from Germany's central bank president that could give us some clues about the European outlook. But the really big ones to watch are coming out of Japan. We've got a super highly anticipated policy statement from the Bank of Japan, and then everyone needs to circle February 11th on their calendar. That's the day we get the next US inflation report, and that one is going to be a massive, massive data point for the market. And so, all of this leaves us right back where we started, with that one big question. We have inflation that just won't quit, We have signs of real strength in some parts of the economy and clear weakness in others. The path forward? It's anything but clear. So which one of these signals is going to win out? Which one will finally dictate the market's next big move?
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching. Don't forget to like and subscribe.